After the break, financial advisor Michael Ruggiero is going to give us some insight on what we can expect today.
All right, welcome back on this Tuesday morning. And as we suspected, a lot of the futures gains we saw overnight at one point over 800 points have dwindled down to almost nothing. In fact, we were in the negative just a moment ago. We are in the green right now at about 12 points. I want to bring in, by the way, the market's down 30% since their February highs, and the word recession being tossed about quite a bit these days. So I want to bring in financial advisor Michael Ruggiero to tell us what we can expect for today. And Michael, as I say good morning to you, you know, the news isn't just dire here. I just read this morning that Volkswagen, the world's largest automaker, is shutting down indefinitely. We reported this morning that Nordstrom is closing all of its brick and mortar locations at least for 2 weeks, if not more. We're told that if the airlines don't get a bailout, and soon they could be out of money before the end of the year. How does all this sit with you this morning?
Well, I mean, obviously it's nothing, there's no good news here on that front. I mean, I find it interesting that these companies, these state and local governments are taking this type of action on top of what their own federal governments or hierarchical governments are taking. And I think that that's a good thing because obviously this needs to be done, and they are making hard decisions.
You know, there's a great line from the 80s classic Wall Street where Gordon Gekko says to Bud Fox, never get emotional about stock. Michael, I would imagine that you have dealt with a lot of people who have been invested in the stock market for a very long time. They've seen a giant chunk of their portfolio evaporate in recent weeks. What in the world do you tell your investors to keep them calm right now?
Exactly that. Don't get emotional about stocks. Keep calm. We've seen this before. Of course, it all depends on their age, on the type of investor that they are, what their goals and objectives are. So if you are a long-term investor, there's no need to panic about this. And I think what's important is that if you are going to be in the market, that you are in stocks, mutual funds, ETFs, that at least pay a dividend. So at least you're getting paid to participate in this.
Let me ask you, though, and that's great for millennials, Gen Zers in particular, because they've got a lot of time to make up for these losses. But if I'm a guy in my 60s and I was hoping for retirement within the next few years, is there a safe haven I can go? Is there someplace I can park my money and not stress about what we're seeing on the board?
Well, if you're someone that's in your 60s and you plan on retiring in a few years, then your money should have been heavily weighted in fixed income, CDs, money markets, things of that nature. Yes.
Okay.
That's where you should be. That's where that would be a proper allocation for someone in that scenario.
And lastly, there has been some talk, I have heard, about perhaps suspending trading at least until we get all the emotion out of this. Is that something you'd like to see, or should we just keep going?
I think that we should just keep going. I think suspending trading would signal panic. And I think that when the markets do open again, I think that it would be a complete disaster because stopping trading would tell people that they don't have access to their money. And that simply is not the case right now. This is not a credit crunch, a credit crisis. The banks are still liquid. All of these organizations have so much cash on their balance sheets that they can withstand and sustain this chop and volatility.
That's nice to end on a positive note. Let's leave it right there, shall we, and not go any further.
That's great.
Mike Ruggiero, thanks so much for your time this morning. Appreciate it.